too sweet. Thank you. I'm really happy to be here tonight. And, it's funny. I've been in this field for 30 years. And so when I first spoke to Mike, you're in a field, you're pursuing something that nobody really wants to talk about. So when somebody calls to ask you to speak, you figure he must be brilliant. So you deserve to be here. Anyway, I'm delighted to be here and appreciate the opportunity. Before I jump into the talk today, though, I was reading an article a couple of weeks ago about people who go to talks, people just like you. And the article, it began and it said, you can divide the people in the room into 3 groups. About 20% of you are going to be looking at me. You're going to be tracking on every word. You're going to be focused, learning, and really, really following what I'm saying. The other 20% are going to be looking at me, and you're going to be thinking about who's picking up the kids tomorrow, or when do I got to pick up the groceries. You'll be thinking about your errands. And the other 60% are going to be thinking about romance and where they're going on when you're going on vacation next. And I found that really great to know, because what that means is that no matter what I say tonight, 60% of you are going to really enjoy this talk. Let me see if I can work the technology. Yes, so I'm going to, there are a decent number of slides, and here's what I'll say about numbers and so on. I'm putting them up there primarily as points of reference and orders of magnitude and directionality. It's not critical, to focus on a particular number. I want you to get the real sense of what's behind that. So I'm going to talk very briefly about some key trends that are affecting elder care, provide some background on long-term services and supports. What is it? How do we define it? Who provides it? Why should we care about it? And then present some current thinking on long-term services financing. And there's a big debate going on right now, and I'll include you in that. So just a little context. A lot of times when people talk about the aging of the population, you get a bunch of graphs, that show the age bubble and so on. I want to make 2 points that I find frame everything for me. The first one is what we're experiencing in terms of the revolution in life expectancy. Here's one thing you will likely remember from this talk tonight. In the first 4 million years of human existence, we added exactly 15 years to life expectancy. In the first 4 million years. In the last 117 years, we added 30 years. So you may not feel it because we're all in this period right now, but it's an absolute revolution in terms of life expectancy. And so what we have done very well is figure out how to add years to life. And now what I think most people, and this goes to what Chifra's saying, how do you add life to those years? How do you give meaning to those years? And it's a very big challenge. I was speaking with Warren. Where is Warren? There you are. Over the hors d'oeuvres, and we were talking about he's serving on different boards and so on. I'm not going to say your age unless you give me permission. 83rd year. And what I said to him is, the reason that you're doing all that precisely, you're in your 83rd year and you're independent because you're engaged. The importance of staying engaged. The other point is that people all of a sudden will wake up one day and they'll say, yeah, I'm aging. Well, the fact is we're all aging. Some of us just have more experience than others. And, the reason I say that is because that means that we need to think of these issues not all of a sudden at age 65, or which is an arbitrary cutoff age anyway. And what's unique about this generation is it used to be that you would hit old age by accident. People never had an expectation that they were going to live into their 70s and 80s, and now everybody has that expectation. So we are the first, among the first generation to reach old age, not by accident. The next point I want to make is that the future is already here. It's just unevenly distributed. When you look around the world, you see the way that, in particular, centenarians are living. There's a fantastic book called the Blue Zone, and it talks about these communities around the world where a majority of the people are living well into their 90s independently, and so on. And we have a lot to learn. The most important point that one can take from those studies is connectedness, staying connected. And what we're going to focus on a lot tonight is the greater span of life spent in retirement. And I use that word retirement reservedly because we don't have a good notion anymore of what retirement means. We know for sure that we have an expectation that we're going to have to pay for a greater span of life outside of the traditional workforce. We need a new language, maybe unretirement, because it's now becoming less and less frequent that people will just stop working, and that retirement used to be defined as the absence of work. Now you have more people thinking, okay, second acts, to your point, Jifra, and so on. And the third point, and this gets to Mike, what Mike was saying, we're going to feel great after this or not so great. More people are living to experience significant need for support services. And I'm going to spend a lot of time on that tonight. And more years out of the workforce with increasing health-related liabilities. And so what I wanted to do tonight was to focus on this issue of long-term services and supports with a particular emphasis on financing. And let me just quickly define what it is, just for level setting so everyone understands. First of all, these are generally non-medical supportive services. I mean, it's very interesting. During work life, people are expected to work. That's what the expectation is. What is the expectation during retirement? Well, the expectation is to live independently. And when we talk about non-medical supportive services, we're talking about people who, for various reasons, usually functional or cognitive, are unable to perform some of their basic living activities, bathing, dressing, toileting, and so on, without support. And as I said, the cause can be functional or cognitive, and there's a very high correlation between having some of those needs and also suffering certain chronic conditions like diabetes and asthma and heart disease. Typically, these services are provided in three settings. They're in nursing homes, home care, and community-based settings like assisted living, continuing care retirement communities, and so on. By the way, most people do not live in nursing homes. Most people will not go to nursing homes. Most people age in their homes or in communities. And what's interesting about long-term services and supports and why it's so different from medical care is that this kind of care can be provided by spouses and adult children. And then you have paid caregivers like home health aides, homemakers, and companions. And this issue that families can provide this care causes a lot of philosophical debates in this country about the proper role of the private sector and the public sector. It's not like, for example, if you have an acute care problem, you have an appendicitis, you're not running to your neighbor to have them do surgery on you. There's medical professionals take care of that. With long-term services and supports provided by family, friends, and so on. What's interesting about it is that it's not, if you have this need for ongoing support, typically it doesn't end there. There's a very high correlation between having a need for assistance in bathing or dressing and so on, and also having chronic conditions. And what this graph here, what I really wanted to show here is that there are really high costs associated with it, okay? And this provides just a backdrop for what we're going to discuss very shortly. So what is unique about long-term services and supports? So first off, in this country, there's a tremendous shortage of geriatricians. And the first bullet point, I think, gives us a hint as to why. Why do people go into the medical profession? Why do people become doctors? To cure people, right? Somebody comes in, they've got an illness, the doctor cures them, and it's great. Long-term service. If you have a long-term services and support need, the services are palliative. They're designed to maintain a certain level of functioning, maybe improve it to some degree. But for the most part, it's not curative. That, for many physicians, has less meaning. And we have an acute shortage of physicians that specialize in geriatrics in this country. I mentioned that paid and unpaid services are close substitutes for one another. You don't have that in medical care. You do have it in long-term services and supports. Family caregivers dominate the provision of care. So I'm just going to give you a few statistics. It's remarkable how much families are providing care for elderly friends and relatives. There are 40 million caregivers in the United States that are giving about 37 billion hours of care on an annual basis to people who have long-term care needs. If you actually put a dollar value on that, for example, a home health aide comes into your house. Typically what they're paid is $22 an hour, okay? If you actually put the value on that, the amount of care that is provided by families, okay, is 6 times more than the largest public payer, Medicaid. So a tremendous amount of care. And as I mentioned, most of the people who have these needs live at home. They're not living in institutions. Finally, we often think of the need for long-term services and support as just emanating from people who are, elders. 40% are below age 65. So this is not just an issue that is faced by elders, but unfortunately, most of the information and data that we have, good hard data, is on people over age 65. So I'm going to be focusing a lot of what I'm going to say on that population. Now let's see if I can figure this. There we go. So in the United States today, what are we talking about? This is a static picture. This says that roughly there's about 6.5 million people who need significant help. That means that they lack the ability to perform at least two or more of these basic living activities. And across all ages, it's 12 million, okay? Now, here's the thing. Because of longevity, this number is expected to double by mid-century. And this shows just in the next 50 years what is going to happen. So that means that the need for these types of services is going to grow tremendously, okay? And what this graph shows is what's called a prevalence rate. It just means if you took a group of 65 to 69-year-olds, what it shows you is how many of them have functional limitations. The blue is how many have functional limitations and can't do certain things. The red is dementia, and the green is both. And then purple is how many people are in nursing homes at particular ages. So what you can see is all the way up until age 89, you still do not have a high percentage of people in nursing homes. But you can see the prevalence rates in particular of dementia, which is particularly difficult to care at home for people who have dementia. Now, I will say that the amount of money that is pouring into dementia research right now is, for those of us who've been in this field for a long time, is really heartening. And we are getting closer and closer to understanding the processes, and that will when we crack that nut, which I believe we will, all of these graphs you can throw out the window, because a lot of what drives elder care, that people are living long enough to experience dementia. It seems like it's gotten worse, but it's just because people are living long enough, okay? Now, there's a difference between a prevalence rate and a risk. So, for example, this says at any given point. how about this? I'm going to ask, how many people in this room think that at some point they are going to have a functional or cognitive incapacity before they die? It's an educated. Here's what I usually get. And then how many people think the person next to you is going to get it? And everybody raises it. Yeah, everybody's raising their hand. Yeah, maybe already, exactly. That gets to the denial issue, which I'll talk about in a minute. But so here's what the risk is, okay? The risk is if at age 65, half of adults are going to experience some high level of care need. It might be for a very short amount of time. It might be for a longer time. But there's a 50% chance. And the issue here is we don't know where we are in the distribution. That's why we're much more comfortable if there's a 50% chance it's this guy, right? Any guesses about who has a higher risk, men or women? Men, you think, have a higher risk. You would be mistaken. And here's why. I know people just said, oh, thank goodness. That just means you died earlier. So I often talk about the fact that long-term service and supports is actually, it's a woman's issue. Because quite honestly, for males, when we become functionally impaired or cognitively impaired, we have our wives to take care of us. And then we move on. And they don't, typically, women do not have the same level of support as men do. And women tend to live longer, which means that they have a higher risk. And that's why they have a 60% chance of needing care. Now, this shouldn't depress you, because when we look at high levels of need, to me, this is a really interesting graph, because if you look at the gray, where it says no need, basically almost half of us are not going to have any need, okay? And you can see that in the red, there's some of us that are going to have need that lasts less than 2 years, some 2 to 5 years, and boy, if you're in the green, you're in a world of challenge, okay? The issue is, like everything else in life, we don't know where we personally, statistics apply to groups, not to individuals, right? So we don't know where we are in the distribution. We'd like to think that we're all in the no need, but we don't know. And there's a wide distribution. And I point that out because usually when you have a wide distribution, okay, there's a mechanism that is used to address risks that are widely distributed. It's called insurance, okay? And I'll talk about that in a minute. Who pays for long-term care, okay? Number one, it's elders and their families. The major public payer is the Medicaid program. Here it's Mass Health, okay? And private long-term care insurance, okay? A few things to say. First of all, to qualify for Medicaid, you must typically spend down your income and assets before receiving paid care. That's how many people actually spend their money, and then Mass Health or Medicaid will kick in. The issue is that because of the aging population, expenditures on long-term service and supports represent one of the highest growth components of state budgets. It's really a fiscal challenge for public payers, okay? The other problem is that a growing number of middle-class elders are having to rely on that program, okay? Now, the private insurance market covers only a small number of individuals, and the market has contracted significantly over the past decade and a half. I'm going to talk about that in a few minutes. The main reason is that premiums have really become out of the reach for many to most middle-income Americans. This just shows the distribution between those payer sources, okay? Now, here's the thing. It costs a lot of money. This is national data. You can be sure that in Massachusetts it's higher than this, okay? The cost of a nursing home, assisted living, and home care, okay? This shows the expected lifetime costs, okay? It doesn't mean you're paying for this, but public and private payers, okay? And this shows that the distribution of costs are highly skewed, okay? Some are going to spend none, but you've got 15% who are going to spend over $250,000. It's a lot of money. So it's a big challenge facing the country, okay? You got 25 million of today's seniors are going to need, 25 million of the cohort alive today is going to need long-term services and supports. People save too little. They deny that the costs are there. And future long-term service and support needs, they threaten other elements of our retirement security. Okay, so you put that together and we have a big challenge ahead of us. So what can be done to address this challenge? What is the key contextual reality? The key reality is that the fundamental problem is that there's not an effective insurance mechanism. I mean, here you have an unpredictable, potentially catastrophic risk. It's actually inefficient to save. It would be like me telling you, you know what, in case you have a fire, put aside money so you can protect your house. You would never do that because you would either save too much and give up too much consumption, or you'd save too little. It's the same thing with long-term services and supports. Okay? So for any risk with the characteristics, we rely on insurance. But private insurance market has not grown to meet our early expectations. Less than 10% of the public has the insurance. There have been a lot of carriers that have left the market. And public insurance through Medicaid, you basically have to spend down your income and assets before you're able to access it. And there's been a basic philosophical divide in this country. And it has stymied our ability to decide on what the best approach is. So you have those individuals who would limit public policy to promoting private insurance. And then you have those who regard public insurance as essential, the only way to make sure that enough people can get insured. And because you have family caregivers involved, it's often seen as a private issue, not a public issue. But over the last probably 5 or 6 years, a number of groups, believe it or not, even in this political environment, a number of groups have seemed to be leaning in the direction of a new public-private partnership for financing long-term care. So I'm going to make just a few points about the private market. Actually, you know what? If there are questions, maybe I'll skip through this, only to say that there are products out there that are selling, but they're not selling in the numbers that we had hoped, okay? They're good products, but they're costly, okay? And this is one of the reasons why they're costly. This says pricing long-term care insurance. No simple matter. Oh, if only it were so simple. I won't go into all of the reasons, but it's been very difficult for actuaries to price this product appropriately. And you can see, for example, what has happened to annual sales. We're below 1990 levels. This is individual market. This is the group market. Everything's going in the wrong direction, right? I mean, it's really a significant decline. The only bright spot is there are these new products on the market called combination products that combine life and long-term care, annuities and long-term care. And if there's time after, we can discuss those. And the thing is, it's a good deal if you happen to be one of those people who become disabled, okay? So for example, this chart shows that if I bought a policy at age 60 and I became disabled at 65, I would have paid in $13,000 in premiums for this particular policy, and I would have gotten out close to $270,000 in benefits. So if you happen to be somebody who becomes disabled and needs the coverage, it's a great deal. You just don't know whether you're going to be one of the 50% that has a policy and never uses it. despite its limited reach, as I said, for those who have policies and develop a long-term care need, the policy is going to provide benefits. It's one of my favorite. I mean, how many cartoons can you find on long-term care insurance, right? A great catch. He's a widower, still frisky, and he has fully paid up long-term care insurance. Okay, so this public approach that I'm talking about focuses on having a public insurance program for catastrophic risk where private insurance covers upfront risk, okay? And the idea is that private insurance carriers are no longer willing to provide coverage for the catastrophic risk, okay? And most middle-class people can no longer afford policies. So if you're able to combine a back-end public catastrophic approach with a private upfront approach, you can provide meaningful protection for Americans. And so this is just something I've been talking a lot about with folks in Washington about what this would look like. And it would be as I said, you'd be disabled for maybe a year or two, and then a public program would kick in with benefits. Your personal responsibility would be to pay the first roughly year or 2 years, or if you're high income, potentially 3 years. So in that case, you could plan for that as you're going through your lifespan. This is a chart that basically shows how the public benefits would be distributed. It shows that the longer you're disabled and need help, the more the public coverage would cover you. Finally, what are the costs of a program like this? Not nearly as much as you would think. The idea is that the program benefits will be targeted to middle-income elders, okay? And this type of program would increase total dollars into the system. It would reduce family burdens, and it would reduce Medicaid expenses. The idea would be that there would be a surcharge on our Medicare tax that we pay today. And that surcharge would be 0.85% of earned income. What does that actually mean? This was a fun exercise for me. Like, it would mean that a 40-year-old, just like you get your Social Security taken out, would have that assessed. That's the equivalent of $33 a month. So I asked myself, well, $33 a month, how do I think about that? And what you can see here is on average, just kind of typical expenditures. We don't think twice about spending $35 a month on our internet fee or close to $150 a month on cell phone, but we get very nervous about when we call it a tax versus a premium and covering a risk that will have a potentially catastrophic effect when it's not covered. So I just wanted to give you a very brief overview, and we'll have time to discuss this. But we have a panelist coming up. And in summary, a lot of the challenges and opportunities with the aging of the population requires to think in new ways. And that's what, at least there's a group, different groups are starting to think about this whole issue differently. For example, some people are thinking about caregiving banks. You know, kids don't live with their parents anymore. So you set up a bank account where you find someone who will care for your parents, you earn credits, you care for their parents, all sorts of creative ways to try and support families. And even if the politics right now don't allow for this type of thinking, we need the intellectual infrastructure in place for when policymakers are going to confront this. And by the way, problem's not going away. Not going away. So only by addressing this particular part of the challenge can we assure that retirement is an opportunity for further growth and development rather than hardship and financial insecurity. So with that, I'm going to close, and I think we'll have our panelists come up, right? Thank you very much, and happy to take questions.